Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Linn Associates with your metals market update, and this is your weekend version for Friday, the 9th of June, 2017, and finally we're going to get some real summertime weather for a change. Now, it was an interesting week. We have had, obviously, a whole slew of things, starting yesterday on Super Thursday, as they call it, with the European Central Bank holding its policy steady and very dovish. You've seen a good break in the euro because of that. That kicked the dollar up. We now looked at the second part, the Comey testimony, and it's got as many questions as the testimony brought. President Trump was literally just on TV. It's 2:20 right now, and he's just wrapped up a conference where he said he's willing under oath to swear that Comey is basically not saying what was said. He won't call him a liar. He just won't answer whether that is what it is. And, you know, it's either he's a liar or he isn't. Which one is true? He was asked questions about his taping. He said, you'll hear soon about that. Don't know what that means. Then we saw the British election, and you can see what happened to the British pound. It fell hard, went to the 100-day moving average of closes and held there very nicely. That's what it, I think, was the first major resistance zone. There's also another moving average down there that I'm paying close attention to. Then now we're transitioning to the FOMC meeting, which takes place on Wednesday with the press conference by Janet Yellen. So that's going to all impact the metals. Gold is down, as you can see, $7 today. Silver backed off from the 1740s, got to 1715.50, finished the day up around right in this level. The copper market's come alive all weekend long, so it is looking at something, and that something is typically either China or world demand for the metal, because we call it Dr. Copper. It often looks at world production numbers. Now let's go to a monthly chart on gold and understand what's taking place here. Now this is monthly, not weekly. The overall trend is that was forming a triangle. That's the big blue lines. I can also put in another channel in the red right through here that ends up forming another narrower triangle, if you will, and a channel line. The market is not broken through that one way or the other, and that's what I'm waiting to see. I would think that if the market gets back over the 1320 area, in terms of a chart pattern, it's gone to the upside. So something I'm looking at on the monthly charts. Now when we go to the weekly charts, you've gone in terms of an upthrust from 1194.5 to 1295.20 made this week, and now you're going to close lower, but you haven't broken any of the key numbers on the chart. When we look at an area chart of weekly closes, you can see how the markets dropped down from this 1287.40 to 1226.90, had a bounce, pullback. The key is going to be to get back up over this and ideally take out 1287.40 on a closing basis to get the bull market going again. You're in a pause stage, as I'll call it. When you put on the swing lines, which are these brown lines on the chart, you have a clear pattern of higher lows and higher highs. This high right here took out 1294.80. So you've got your continuation of the bullishness until 1214.30 is taken out on the weekly charts. When we look at the moving averages, you're well over the 18-week moving average and the 100-week. That part is bullish as well on the chart. So what happened? Well, what happened is the market went up to the upper Bollinger Band at 1295, and that's where it stalled out. And you can see how that happened. The good news is this is the first time the market's gotten up there in how long? You got to go back here to last summer. That's bullishness in this market. So I like what I'm seeing. Pullbacks even into the 1250 area. While it'll scare some people on the daily charts, the weekly chart will stay bullish even if that occurs. In the slow stochastic momentum, you're stalling. And that should be expected in front of the FOMC meeting because it might prop up the dollar more or it might drop the dollar down. You got to wait and see how that's all going to play itself out. The market's almost 100% unanimous in their opinion that the Fed's going to raise interest rates next week in June. It's the wording after that because many people think the Fed will come out and say, nah, that was that data, we're going to be stronger, or they're going to say in the conference, especially with Ms. Yellen afterwards, well, we need that data to pick up. If it doesn't, yes, it could pose some problems. So we're going to find out what it all says one way or the other. In the silver chart, you got right up to that 18-week moving average of closes and failed. Now, the chart pattern is still bullish because you have a pattern of higher lows and higher highs, but you didn't close over the 18-week average, and that is holding this market back. Momentum-wise, you've gone flat in the market, so it's an interesting period. In the copper, the number that you had to close over was 261.80 to get over the 18-week average of closes, so now you're in a longer-term bull. Finally, this has been a long time coming. Now, until this week's low of 251.55 is taken out, the pattern has the swing line of higher lows and higher highs. You're over the 18-week average and momentum pointing to the upside. 275 is a potential target. The word is potential. I don't know if it'll get there, obviously, but that's what you're fighting. In the platinum market, take a look at the battleground. It's the green line, the 100-week average, and the 18-week average of closes. The market does have a pattern of higher lows and higher highs because this week's high did take out 969 from last week. It can turn and neutralize itself if prices were to get under 925.50. Barring that, you're in no man's land. You can't close over the 18-week average, sort of like silver, yet the swing line is pointing up, sort of dead in the water right there. The palladium, and I pointed out this week that spread was back on, exploded to the upside. So where the traders are is they're buying palladium, selling the platinum market. You've got, though, a pattern of a lower low and a higher high. Momentum still pointing up, but you're over that upper Bollinger Band. I'm looking for that spread to start unwinding very shortly because of this. Yes, you can go up a bit further. There's no magic to that, but every time you've done it in the past, you've gotten thrown back in fairly fast order, so let's see what happens. In the dollar index, you are still very much in the bear mode. Still have momentum going sideways here, but down. You've got a pattern of lower highs, lower lows. Big resistance just above the market at 97.68, which is the 100-week average of closes. So this is a bear market rally at this point, not a lot more than that. And of course, you've got to pay attention to the stock market today. It's wild. I've been watching the action. It's just a little bit of everywhere at this point. You know, it is summer. Why don't you take advantage of my trading course? And it's really a charting course more than a trading course. And the reason is, whether you trade ETFs, the stock market, or futures, a chart is a chart. And in fact, on a lot of the videos that you're going to see, I removed the name of the chart because I believe in that philosophy. And what I teach is really simple. It's 5 techniques: moving averages, swing lines, slow stochastics, got to have those as you're moving, Bollinger Bands, and window envelopes. And what I do is, it's 54 videos, 4 hours plus of video time. You'll be able to get through it in a very short period of time. I give you charting software that includes all the data you need with it, so you see what I do on a chart, and then you do the same thing. Then, in the mornings, I will record for you a short video, typically 10 to 15 minutes long, and I review everything you're learning on different charts. You're able to open up a current chart, see what I'm doing. It reinforces what you're learning. I believe in the see what I do, you do the same thing, and then you can build on that any way you want, but you'll understand the trading discipline. You get the charting course, the 54 videos, you get the charting software, a $99 value, access to my morning videos and written research, a $60 a month video. It typically goes for $99.95 total. There is nothing to ship out, so there's no shipping, no handling, but if you write IRA 20 on the form, there'll be a discount coupon form, put that in, you'll be able to get the course for $79.95. This is a limited time. You can call my staff if you want it. Go to our website under the word education. You'll be able to buy the course right there. You can click up here if you see me on YouTube as well, and what will happen, that'll take you, that icon, right to the form. Away you go. And yes, on our page where you buy it, I answer all the questions. There's fact sections. I made a short video so you understand the teaching method. Why not take advantage? What do you got to lose? $79.95? It's a minor tick or two in these markets. I think you realize that. I'm Ira. You have a great weekend, and I'll see you all next week.